From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for July 11th, 2016. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. We have a relatively quiet news calendar today, but towards Wednesday, Thursday, and Friday of this week, we do have some key events that you'll want to keep an eye on and take note of on your financial calendars. Okay, first off, let's get started here on the USDCHF, the US dollar versus the Swiss Franc. In the live trade room, we've been studying the downward-facing long-term trend channel between the two red trend lines for quite some time. And of course today, and just like last week, we are approaching the top of that trend channel. The question, of course, is are we going to see the continued strength of the US dollar and the breakout higher above this trend channel and change it to an uptrend? Or are we going to find resistance once again inside the trend channel and turn back lower? And of course, that question really hasn't been answered yet because we really haven't made headway either higher or lower yet this week. So let's go ahead and zoom it in a little bit here on the daily time frame. And we can see the market challenging into the top of the trend channel, the red trend line that's here on the chart. Last week, we did break back above the 100-period simple moving average, so that gives us some clue to the upside as well. We do note that our last major low, bottom of the black trend line, is higher than the previous low, which is the bottom of the blue trend line, so that may be a clue as well to the buyers becoming more interested in protecting the supports and the sellers becoming less interested. And of course, that could just be a clue to potential direction. I think the main focus here would be the breakout above the last significant resistance high up here into the 9,900 level. If we got above this area right here, then I think we're clearly looking for an uptrend. So until it gets above that last high where the blue and the black trend line intersects, we still have the potential to go back down. It is interesting to note for those folks that have been following the Forex Black Book indicator that this week the trend indicator turned green. So that being the case, if it remains green and we continue to see bullish momentum, that gives us opportunities to go long looking for that breakout and the continuation higher. Now on the other side of it, of course, we are underneath the trend line, we are underneath that low, and the potential for a turnaround is possible, but I think it's going to take some sort of significant news catalyst to drive it back down. Let's go ahead and take it down to the 4-hour time frame. Again, we can see the market challenging into that resistance high, but hasn't broken through it. So if you're going to go long, let's go with that direction, because I think that that's the direction the current market is really focused in on, is going long. If we're going to go long, we only really want to go long at two places. We want to buy it at the orange zone. That's a dip into support. Resistance here helps us identify that as support. Or the breakout of resistance, which at this point may be the breakout above the 98.65.85 level, the pink, purple shaded area that you see here on the chart. I might even bring that down just a little bit. Let's bring it down closer towards the 98.60 level at the bottom of that purple zone. So 98.60, 98.80, 85 is the purple zone. It'll need to break above there if we're going to go long. So buyers, dip to support or break above resistance. On the other side, if you're looking for reversal once again, I think the biggest clue to reversal would be the breakdown of the orange zone and the continuation lower. But if you're looking for selling on rallies to resistance, of course, the purple zone is your spot to watch today. I'm going to be focused in on buying, looking for buying the orange zone, break above the purple zone, providing us with low risk, higher potential reward. At least at this point, that seems like the direction the market wants to go for the US franc. Moving on over to the euro dollar, just the opposite. Of course, we've seen the market push underneath the long-term red trend line. We've discussed that in the live daily trade room. You can see the 100-period simple moving average sitting up here closer to that red trend line. So we're underneath both of those. Last support low, right here at the black box. You can see that support low. The market came up, challenged it, and fell off of that green zone and even touching the pink zone. And now we're at the blue zone. 1.1 thousand is the bottom of that blue shaded area as our support today. Let's go ahead and zoom it in a little bit. You can see that blue shaded area holding as our support today. If we're going to go short in the direction of our most recent momentum, 1, 2, 3, 4, 5 days being bearish, we want to go short at two places. Above here into the green shaded area, that's closer to 1.1100, or the next thing we're looking for is the breakout underneath the blue zone. Those are your opportunities to go short. On the other side, if you're considering reversal and the opportunity to go long, as close as possible to 1,000 at least provide you with lower risk. The current market does seem to be a little bit more bearish than it does bullish. We also see that Forex Black Book is still red on this currency pair. So the franc is green, which is bullish. The euro is red, which is bearish. So they're looking very inversely correlated here, where one's going up, the other's going down. So if that's the case, we would definitely have somewhat of a bearish bias here for this currency pair as well, selling resistance or breakthrough of support for the euro dollar. But those are the key levels that we'll watch this week. Nothing really exciting happening at the current moment for the euro dollar. Moving over to the GBPUSD, I think this one's interesting today. We have seen a pressure back higher into resistance today on some news out of the UK, but definitely finding resistance at a familiar place. Let's go ahead and zoom it in one more time here on the daily time frame. See if I can get in. No, that's as far as I can get in on the daily. Most importantly is that blue shaded area. Let's talk about 1.3000, 1.3025 as our resistance. Support 1.2900 down into the 2870 level, the orange shaded area at the very bottom. Probably makes more sense to take it on down to the 4-hour time frame and just look at it in this viewpoint. There's the little bit of a bump higher that we're seeing today. That, of course, gives us some opportunity. If you're looking to go short on the pound, then we're looking for it into resistance, which, of course, the closer you can get to 1.3000 is your resistance. So your lower risk, higher reward opportunity today, given the state of affairs here on the pound dollar, would actually be going short into the blue shaded area as close as possible to 1.3000. Breaking back underneath the orange shaded area, if it pushes back down and goes back underneath 2875, we would look for it to head on back down in the direction of the trend. I don't think this is a trend changer for this currency pair, but I definitely see we have some knee-jerk reaction to some news out of the UK today as it pressured back higher into the blue shaded area. So if we're going to see a game changer, if we're going to see a trend change, I think we need it to break above that blue shaded area. Currently, of course, the support is the orange zone. So if you're going to make trading decisions, blue and orange zone is your spot to watch. I think at least at this point, still focused on going short and selling into the 1.3000 level for the pound dollar today. Moving on over to the USDCAD, the US dollar versus the Canadian dollar. Of course, we've been studying here on the daily time frame this triangle type pattern, rising lows along the blue trend line, falling highs along the black trend line, and we've seen some changes in behavior, changes in sentiment and momentum here for this currency pair over the past several days. Let's go ahead and take one quick peek at the oil prices, because we often want to take a peek at those oil prices when we're studying the Canadian pairs, USCAD specifically. We saw the breakdown of support last week on oil prices. So if they continue to break down, oil prices continue to go down, that inversely affects the USCAD, and we expect it to go higher. So that's interesting to watch as you go through your week. Zooming in one time here on the daily time frame, you can see challenging resistance 1.3065, 3080. If we can get above 3080 today, I think we're looking for the next challenge into the 3140, 3160 level, which is the yellow shaded area at the top of the chart. If it can't do that, if it can't break through the purple shaded area, we could be looking for a dip back down into support, which at least at this point would be back at 3000. 100 period simple moving average sits there as well. 4-hour time frame. Zooming it out a little bit, take a look. It's challenged it today, but no breakout. And the reason I'd point out this is look at that green circle. You see 1, 2, 3 times it attempted to break that purple zone inside the green circle, false breakouts, and eventually turn back lower down into the 28s. I'm not saying that's what's going to happen today. I just want you to be cautious on a false breakout. So how could we recognize a real breakout? What that means to me is looking for an open and close above that purple shaded area here on the 4-hour time frame before I have any confidence in the upside. Interesting here also, Forex Black Book, momentum shift. It's turned green from the red trend bar down here. It's now turned green today. If that's any clue of momentum shift, we could be looking for the continuation higher for the USCAD. Moving on over to the USDJPY, US dollar versus the Japanese yen. Of course, we've seen a little bit of a momentum shift here on this currency pair as well. Not signaled yet in the trend bar for the Forex Black Book. It still shows bearish because we've primarily been bearish over the past several weeks. But our first clue of the buyers coming in, buyers stepping in today with a big bullish candle. Let's go ahead and zoom it in a couple of times here on the daily and take a look at that. There's your big bullish candle, the big blue candle. Last week we noted here, and here's this little black arrow right here representing the fact that we would expect it to go lower if it breaks through 100.60, which it didn't do. No open and close underneath 100.60. So now we see that reversal, or intraday reversal. I don't want to get too excited about this until I see other clues to reversal. I'm sure there are a lot of people that saw this blue candle up here and said, hey, it's going to go up, and then it turned right back around and went back down. Of course, we had the Brexit news that caused that, but this is the caution I have. You see it rising here, big blue candle up into the purple zone. I don't want to get too excited until I see further evidence of reversal. Higher lows, higher highs. But very interesting today's market movement here on the US yen. Higher lows, higher highs are what we're looking for. I don't think we have that yet here on the US yen, but definitely some potential clues to some momentum shift here for the US yen. So not really an opportunity, I think, here yet on the US yen, but just continue to watch this for further evidence of a momentum shift or maybe even a trend shift for the US yen over the coming days. Moving on over to the AUDUSD, we've been kind of stuck in a little bit of a tight period of congestion or range here. The blue box you see here on the chart. Interesting is the market continues to try and challenge the top of that 75.69, or I guess that's 75.70. Sorry, 75.70 is the top of the pink shaded area and the blue box. If it can get through 75.70, we'll likely look for it heading back up into the 7600s, the mid to upper 7600s, the green shaded area. But until it gets through 75.70, 75.70, I'm not too excited about the upside yet. I needed to get through there if it's going to go higher. Let's go ahead and zoom it in on that blue box. Take a look at that. Take a look at the fact that we have found resistance there so far today. As long as it's underneath there, I'm not excited about it going higher. Only if it breaks above that do I start to get excited about it heading higher towards the 7640s or higher into the mid 7600s up here at the green shaded area. If it stays inside this pink zone, falling back down to the orange shaded area is a good possibility. And of course, underneath there, which we discussed last week because we're in the same area, we look for it to turn around and go back down. 4-hour time frame, again, we can see the market here on the 4-hour time frame just kind of struggling inside that pink shaded area. No real breakout. If you're short, then you're looking for it to go down to the orange zone, risk above the pink zone. If you're not short, this may be an area, but I think I wanted to break underneath 75.35, back underneath the pink zone before I would decide to go short here on this currency pair. So at this point, I think we want to break out of the pink shaded area. You could zoom right in on that pink zone today. Let's see if we can expand that out a little bit. Zoom right in on this pink shaded area. Under 75.35, we look for the breakout lower. Above 75.70, we look for the breakout higher. So right now, this is our congestion, and we need the breakout above it to go higher, below it to go lower for the Australian dollar today. And lastly, over to the NZDUSD, New Zealand versus the US dollar. Some similarities of historical price patterns. Take a look at the black box first down here. You see the two resistance highs, the two green circles at the top of the black box into the purple shaded area. Gave us some clue to reversal here for this currency pair. Now we take the blue box and we say, hey, we hit a resistance high here on the left and a resistance high here on the right. So what we're looking for now are further evidence and clues to resistance and then reversal. We need some clues to reversal here for the New Zealand dollar. I don't think we have significant clues to reversal. We have potential double top here, just like what you saw here at the black box, but we haven't seen any further evidence of reversal. I think today is going to be important for the New Zealand dollar. Let's take it and zoom it in a little bit more here on the daily. I think today is going to be important. If we can see this currency pair, the New Zealand dollar, get back underneath this green shaded area, which sits between 72.50 and 72.20, back underneath it. We've already seen today's candle open a little bit lower than the Friday close. That's good news. If this can get back underneath the green shaded area, 72.20, I think that becomes our clue to reversal here, our next clue to reversal for the New Zealand dollar. That's the next thing I'm looking for. As long as it's still above that, of course, we're finding some support right now into that green shaded area. So underneath 72.20, I think we look for this to begin pressuring back down again on the New Zealand dollar. So that's what I'm going to be watching for today. Take a look at here on the 4-hour time frame. Again, we saw a little bit of a gap lower, but at least this week opened lower than the Friday close. Again, we're challenging the green zone, but no breakout underneath it, and we might even squeeze that a little bit higher. Let's pull that up just a little bit. Let's make it 72.25. 72.25, the bottom of that green shaded area. So that's getting us a little bit closer. Breakout underneath 72.25. We'll look for it to begin heading back down into the mid to upper 7100s. That's this little blue shaded area right here. That's our next potential support target, into that blue shaded area, if it breaks underneath the green zone. If it can't, another challenge of the high, and of course a break of the highs, a break of the pink shaded area, will likely look for a new high to be made for the New Zealand dollar. I might even take this line and push it right to 72.95, which will get that pink shaded area a little bit closer to the top as well. So again, we have the resistance high, 72.95, underneath the 7300 level. That's your resistance high. The green zone is going to be your key point today. Under the green zone, we look for it to continue to reverse and go lower. Above it, we may take another challenge back to the pink zone. And be very cautious about going long on this pair, since we are testing such a strong resistance high into the 7300 level. So going long, not really part of the scenario for me today, but watching for further evidence of reversal for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.